Right now, most investors are doing the same thing. They're either panic selling or buying dips too early. But here's the truth: the market has not bottomed yet. And if you deploy capital too soon, you're not investing, you're guessing. In this video, I'll show you what a real panic bottom looks like, why I'm holding cash right now, and exactly when I will go all in panic bottom, while not just a market drop. It's a fear event. Everyone sells at the same time. Prices collapse too far, too fast. Technically, you'll see VIX spike above 30, sometimes 40 U, with massive volume at the lows, price violently reversing through moving averages. This is not normal selling. This is forced liquidation. And when that fear exhausts, the market snaps back fast. But here's where most investors get confused. There are two completely different opportunities.
1. Panic bottom causes the fast, sharp drop due to emotional selling and quick V-shaped recovery.
2. Structural base takes months while institutions accumulate quietly. Price moves sideways. Volume dries up, then breakout, which leads to long-term trend. Panic bottoms are trading opportunities while structural bases are wealth-building opportunities. Never confuse the two. Here is the biggest mistake investors make. They try to buy individual stocks during panic. That's extremely dangerous, because stocks can go to zero. Recovery is not guaranteed. You need perfect timing under stress. Instead, I focus on index ETFs like SPY, VOO, QQQ, IVWY. They cannot go to zero. You're betting on the entire economy. Every major crash in history has recovered historically after a 20% drop. Win rate is about 85% over 12 months. This removes the biggest risk, permanent capital loss. Let's look at history. 1987, crash leads strong recovery. 2008 crisis leads to massive rebound. COVID 2020 leads to a 70% in 1 year. Even extreme events recover. But not all declines are panic bottoms. Some are long structural bears that take years. That's why timing matters. Here is my exact playbook. Phase 1 ETF panic buy. Wait for capitulation. Deploy into SPY, VOO, QQQ, hold for at least 6 to 12 months. Phase 2 individual leaders. Wait 2 to 3 months after stabilization. Rotate into strong stocks breaking out of bases. Example: in 2020 ETF buy, then March stock breakouts, then June to August, the ETF gains funded the next opportunity. This rule is non-negotiable. Never mix the two strategies. ETF capital is time-based, no stop loss. However, stock capital needs strict risk control with possible -8% stop loss. If you mix them, you lose discipline. Now let's talk about today. Here's my assessment. Oil is at high risk. Volatility is still elevated, but not panic market, not crashing. Fed is still restrictive, and geopolitics is also uncertainty. Most important signal: panic bottom is not confirmed yet. No VIX spike above 40. No capitulation flush. No forced selling event. This is not the moment. The biggest factor right now is oil. The Strait of Hormuz carries about 20% of global supply. Every oil spike pushes the market down. High oil plus high rates lead potential stagflation risk. Until this stabilizes, the market remains fragile. In preparing for two outcomes, scenario A: conflict resolves, panic bottom forms. Fast recovery with ETF entry opportunity. Scenario B: conflict continues, slow structural base with no panic signal. Patience required right now. But pay attention to the day ceasefire negotiations become credible or the Strait of Hormuz appears to be reopening. Watch oil prices. The SPX's best recent day was driven entirely by a sharp oil price drop. Here is exactly what I'm doing: not deploying aggressively, building a watch list, monitoring oil and geopolitical news, setting alerts at -15% to -20% levels. When panic hits, I deploy 25 to 30% immediately, add on further weakness, then wait. Then rotate into leaders later. Your strategy depends on your experience. Beginners focus on structural bases. Active traders combine both hybrid, best, with 70 to 80% base investing and 20 to 30% panic opportunities. Let me leave you with this: panic bottoms are trading opportunities. Structural bases are wealth building opportunities. Most people fail because they confuse the two. Right now, the edge is not in buying. The edge is in waiting. And when the real opportunity comes, you'll be ready. Let me know in the comments below what you think, and don't forget to like and subscribe for more deep dive stock analysis.